Hello folks, this is Forex Mentorship with Carries Trading Institute. Today is 1st February 2022 and it's our first lesson for the year. Today I want to show you how you can use power of three concepts in your trading. So let's quickly find out what is power of three. The power of three concept is the concept of accumulation, manipulation and distribution of price. When price opens on a weekly basis or from a weekly candle, price usually opens and goes into accumulation, then manipulation, and then distribution to meet the weekly range or to deliver price towards the weekly range or weekly target. Okay, so but before price distributes itself, or before the institutions distribute price, they will love to accumulate orders and then manipulate retail traders towards the opposite or wrong direction before they distribute price to deliver the weekly range. So this is how it looks on the charts. When price opens, the institutions will love to run a run on liquidity or stop hunt. You see that? So this is accumulation of orders. Price opens and goes, this is the opening price, and price goes into accumulation. Then we see that price goes into manipulation. When price is bullish, it is expected that price would open below and close above on a bullish candle. The opening price of a bullish candle is usually below the closing price. So if this, for example, is a bullish candle, assuming that we have a bullish candle colored green, assuming this is a bullish candle, when price opens, price is expected to go into accumulation of orders. Then we love to see manipulation lower in form of stop hunt or stop raid, and then the institution should deliver price bullish. So should deliver price bullish, and then we love to see the closing price below the highest high of the bullish candle. So this is what we mean by power of three concept. This is a weekly candle that has an opening price. So price open and goes into accumulation of orders, then manipulation here, and then distribution of price. So you can quickly label this as accumulation of price. This is accumulation. Then this is manipulation. And as well distribution. So this is on a bullish candle. When price is bearish, we love to see likewise that the opening price is above the closing price in a bearish candle. So assuming that this is a bearish candle, and a bearish candle is represented with red here, price opens higher, we love to see a manipulation. You see that upwards, and then price should deliver orders, institution should deliver orders downwards, and we love to see our closing price here. Do you see that? This is accumulation of orders, manipulation, and distribution of orders. So guys, this is power of three concept. These concepts are regular on the charts. They are consistent on the charts. All you need to do is to go to the charts and see these things for yourself. So guys, this is the weekly time frame. I'd like to show you how you can identify these power three concepts from the charts. Okay, the first thing you need to do, or you need to learn how to do, is that you need to learn how to identify institutional order flow. You need to know how the institutions, okay, actually deliver price, because the power three concept works only when you understand how to identify trend, when you know how to identify institutional order flow, when you know how price is delivered. That is where you would see the magic of this concept. That's when you would see the magic of this concept. When you have learned how to identify trend, that's when this concept becomes a magic. So the first thing I would like you to do is to place vertical lines on each of these weekly candle, okay, so that it will help us do a proper hindsight study. And I'd like to show you from previous perspective how this concept has occurred and has worked. Okay, so you can see that I have placed vertical candles on at least 4 weekly candles. You can see one here, another here, another here, and another here. Okay, when you have done that, I'd like you to outline the high and the low of this last weekly candle, which was the bearish candle here. You see that? You outline the high, put a horizontal line on the high and on the low of that candle. Then we go down to the 1 hour charts and identify this concept from the 1 hour perspective. Okay, so this is the 1 hour time frame, and this was the opening price of that last bearish candle. This was that vertical line we placed, so indicating the opening price. So you see that price opened and went into accumulation of orders. You see that price went into accumulation of orders after opening on this point. Okay, price opened and went into accumulation. So this consolidation is accumulation of orders. You see that accumulation of orders, and then price is manipulated. Retail stops. The institutions to run buy stops here to manipulate others and retail traders to think that this is bullish. Meanwhile, institutions are actually delivering price to a specific institutional reference point, which was the bearish order block. So you could see this was a manipulation. This movement upside was a manipulation, and price distributed bearishly. You see that this entire down movement was as a result of this accumulation, manipulation. Price broke structure bearishly after running buy stops, after running manipulation. Price broke structure bearishly, delivered into an institutional reference point, and look at how price has been distributing to the downside. So this movement is the distribution. This is the distribution. This range is the weekly dealing range. Now this is the next week. You could see the same thing occurring again. Price opened, okay, went into accumulation of orders. You can see this is manipulation. This run of stops was a manipulation to the downside. Price broke structure and returned to order block, and this is the entire dealing range. This is the entire dealing range, weekly dealing range. Once price delivered and takes out liquidity above this high, went into consolidation, consolidation, consolidation. Now look at this. This was the opening price of that weekly candle. Okay, prior to that, you could see consolidation or accumulation of orders. manipulation to what? A specific order block. Okay, and price has been delivering bullish. You see price broke structure here, broke structure, and return to order block. Okay, return to order block, and price delivered, kept delivering. So this is when you can have a massive weekly dealing range. See, all of this is the distribution. All of that is the distribution. So last week we had a massive bullish distribution of price. So, and this is this current week. You can see what's happening, right? Accumulation of orders, manipulation to take out buy stops, and you can see price broke structure bearishly below, body of candle closed below that low. So we had a bearish break of structure, and price has been delivering bearishly. I love to see a retracement of price on the weekly time frame on the dollar index to a bullish order block, and I believe this is what price is doing. Price is trading bearishly to reach out for that weekly target. So you can see that, right from the weekly perspective, you can see that a power tree concept has already occurred. Let me show you from the weekly perspective. From the weekly perspective, this is the weekly candle, the current weekly candle, and you know that a bearish candle has its opening price above the close. So we had our opening price here. You can see that wick that formed the high of this candle is the manipulation we are talking about here. The manipulation, and price is distributing lower. I love to see price trade low into this order block. So guys, go to your charts, see these things yourself, learn how to identify these things by yourself. It's going to help you in your trading. You can use this as a trading model. Until next time, I wish you good luck, good trading. Don't forget to subscribe to this channel. See you next time.